Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar displayed a brief pullback on Monday but was snapped up rather quickly, as you can see by the posted hammer, and back towards the levels sitting as a key point at 66.8595, where the 60-day moving average is. In light of the pattern, the market is still somewhat mixed in terms of trying to break higher and finding enough support to elevate further towards an objective of 69 cents. However, as you can see, there has been many attempts towards this level and still lacks technical confirmation. So therefore could see a pullback towards 66.30, with beneath there at 65.90 and 65.40 as a potential target. One takeaway is the dollar index, which measures the greenback strength against a basket of 6 major currencies, still remains weak after Friday's weaker than expected US job data. Also this week, we've got speculation that the RBA Governor, Phil Lowe, may be giving his last speech after Treasurer Jim Chalmers is being urged not to extend the governor contract and therefore could see a replacement by Department of Finance Secretary Jenny Wilkinson as the front runner to replace Governor Lowe. However, let's see how that all unfolds. And also this week we've got the US CPI data, which is seen as a key point, which will dictate what the US Jerome Powell, chairman, will view on rates. So far, July is expected to see a 25 basis point rate hike, and also in September, and that possibly be the last for 2023. Let's see how it plays into this week with the data. Looking at the euro, the market has rallied on further as the dollar index drops towards 101.5. In light of the pattern though, we are a little bit overextended, and therefore any movement further above 110 is expected to find an ambush back to a bear case and could even see a bull trap. If so, that would see the market plummet back towards the region of 109 and reassess. The MACD is weak. Along with that, we've got a little bit of divergence here in terms of on a broader aspect of how the last few weeks have been looking on this current 4-day run. The dollar yen, the break of the trend, first of all, around that 143 and now challenging the key point at 140.5. I do feel that we're extremely oversold here, and I do anticipate a rebound. It seems the market's getting a little bit carried away and triggering off, or maybe even seeing profit taking coming back into play here, because this trend has been going for some time and right back towards 134. Keep an eye on this level around 140.5 because a bounce could see the market rally back towards 142 to 143. Sterling, the market post highs around April 2022. And now, after taking out the level of 127.65, is further aspects to the upside and maybe looking towards 130 as the next call. The only takeaway I can see from the weeklies though is there is a bit of divergence here as the market gains higher of at least 2 or 3 points. The market here is declining on the RSI and also on the MACD. So therefore it may be a brief affair and the market takes a stab to the top side or finds that it will probably be ambushed by the bears and see another downturn. But nevertheless, the market bulls are still navigating higher, and no doubt we will see a possible 130 point rise before any reversal. A little bit of a lackluster price action for gold as the market remains underneath the key level around 1,928.30. I'm still holding my view that the fact that the market will take a tumble and further to the downside call of 1,850 as initial target. Any upward attempts beyond 1,930 is expected to fail. A little bit of a mixed picture here when it comes to oil, but still contained by the level of $74. The trend is still bullish, but there is a bit of a pullback coming from this overbought region on the RSI, and the MACD is coasting to a bullish case. The only view I have is that if we see a break above $74, then this would see a further rally onto 78 as an initial target and reassess from there, with any pullback likely to be shallow around 70 to 70.90 where demand may return. Well, that's a wrap. Thank you for joining me. As always, look out for the interest rate report and I hope you enjoy the rest of the day.